From the morning reading, 9 of 10 sectors moved higher on Friday. XLU, XLP, and XLI were the strongest sectors, while XLE was the weakest sector. Oil futures were down $1.98 to close at $45.96. For the week that ended November 25th, 9 of 10 sectors moved higher. XLB up over 2.5%, XLI 2.3%, XLE 2.24%, XLY 2.2%, XLU up nearly 2%, XLP up nearly 1.5%. The spider was up about 1.4%. Only sector that was negative for the week was XLV, which was down about 1/3%. On our year-to-date, the leading sectors are energy, up over 20%, XLI up over 18%, financials up nearly 16%, XLB up 14%, XLK up 12%, XLU up about 9%. Two sectors are negative on the year, XLV down about 3.5%, and the new sector, real estate, down about 4.4%. Breadth strengthened on Friday compared to the prior session as advancers led 1893 to 1037 on the New York Stock Exchange and led 1693 to 937 on the NASDAQ. On the S&P 500 snapshot, we have our fourth consecutive record close. The S&P 500 logged its fourth consecutive record close in the post-Thanksgiving shortened session. The index rose during the opening 30 minutes and then traded sideways to the final 15 minutes when it rose again to close at a 0.39% intraday high. The yield on the 10-year note closed at 2.37%, the highest close since July 14th of last year. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:19 a.m. Mountain Time, and I am recording this in preparation for the market day of November the 28th, 2016. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing and trading decisions that you make. So let's go ahead and dive into the morning report. And at the time of this cut, the futures for the U.S. broad-based indices were all a bit negative, with the S&P futures down some 5 points, or about 1/4%. Russell futures are down about 1/3%. NASDAQ down just below scratch, and the Dow down about 1/4%. And crude oil, they were up about 0.75%. Euro was right around scratch. Bonds were up about 1/3%, and gold is up about 0.75%. In overseas action of note, China up about 0.5%, Hong Kong up about 0.5%, Japan down just below scratch, Germany down about 0.75%, and United Kingdom down about 0.5%. In macroeconomic reports for the U.S. today of note, there are none. And looking forward to tomorrow, we have the preliminary GDP, FOMC member Dudley speaking, consumer confidence, FOMC member Powell speaking, and that should take care of tomorrow. In terms of current volatility conditions, short-term VIX very low, 10.43, skew just barely above the caution level of 125, IV percentiles all in the lowest 20 IV percentiles. The S&P is at a 16, the Russell at 18, the NASDAQ at 12, and the Dow at 17. No standard deviation moves were put in on a close-to-close basis on Friday in the shortened session. In terms of the charts, let's go ahead and go over there. And we can see on our S&P charts, the big action on Friday was a build on the prior action of the week, and of course last night's action thus far has been slightly weak, but nothing of any kind of consequence at this point. That we would have a retracement to come back to the former area of resistance, now turns support, wouldn't be a bit surprising, especially given the size of this move. If it were to do that, that would be about the first level fib retracement. In terms of the Dow has an extremely similar picture. You had the breakout above the resistance and a really strong confirmation on that pattern, a little bit of weakness last night. Nothing of note in that pattern other than just kind of normal expectation of bull flags forming in the future until proven otherwise. On the NASDAQ, the Comp Q has proven to break out to new highs. The NQ futures contract has not yet broken out to new highs. It's come close to its area of resistance, just a few points away, but has not yet managed to bow through that. Right now, we're up against that area of resistance. I would expect that at some point, especially if the other three indices do have a little bit of a retracement and then bull flag breakout, that we would see the NASDAQ probably break up through this area of resistance at that same time. In terms of the Russell, you see just how amazing this Russell run has been. If this were to close red today, that would be the first time in something like 13 sessions. Roughly, let's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. Even more remarkable. It would seem that we have 16 sessions in a row that have been green on the Russell. At the same time, it's not just the count of 16. That's pretty remarkable and extremely rare if it's ever been achieved before. But you've gone, including global overnight activity during the post-election period, from 1123 up about 220 points to the 1348 area that was achieved on Friday. Totally unreal. And a retracement even back down here to 1265, which would seem like a huge move, approaching 100 points. That would be nothing but a bull flag and a very nominalist percentage retracement. So now I'm not saying that we're coming back to 1265, but we certainly should have some sort of retracement here at some point. Especially given that we've blown not just from the bottom of the channel to the top of the channel, but now out of the channel and are resetting a brand new parabolic kind of angle trend. And parabolic trends usually do come crashing back down, at least into a partial retracement. So if you've managed to ride a lot of that, especially in a short-term type trade, you need to be protecting profits for sure. In terms of other markets, crude oil, been a very active market, and the holiday week, big sharp moves up and big sharp moves down. And frankly, at this point, if I got this right, that this was the beginning of the holiday week, we're basically right back where we started from with the current overnight activity coming into the day session, with the day session about an hour away at this point. So a lot of volatility, but really ultimately it's neutral and hasn't really achieved anything up or down in any kind of meaningful way, other than giving the short-term traders something to play with. In terms of gold has continuing to break down, and very sharply so. A little bit of a retracement thus far in the Sunday night into Monday morning overnight session, but really it's still looking like lower highs and lower lows. And with the significant breakdown that we had of this 1200 area last week, expectations is we're probably going to drop down here towards this 1050 area. That would be probably the target zone if you have trades on that setup to the bear side, which we do here in this trading realm. In terms of bonds also a bit of a retracement. At the same time, it has been very weak, and as if anything has sharpened the angle to the downside. So really do not want to be bullish on bonds until really proven that there is a reversal in trend, because all the momentum is to the downside. Take a quick look at notes. You see the same kind of pattern there. Quick look at the dollar. Dollar has retraced a little bit off of its high just before the holiday, but certainly at this point doesn't seem to be anything other than just setting up for a bull flag and a continuation pattern to the higher side for the dollar. Stronger dollar certainly continues to have impact on bonds and on other interest rate sensitive products, as well as commodities such as crude oil and the dollar and and gold. I think that's probably enough on the charts at this point. Let's go ahead and go to the daily report. Some changes, but not a lot since the end of last week. Our last report was Wednesday, of course. We were intermediate term phase opinion, market phase 3, bull Flagville. That's bullish. At the same time, in terms of our current market timing signals, there's 3 of them, all mechanical in nature. The first comes from IBD, confirmed uptrend, bullish. The second one, GMI index, a perfect 6 out of 6, buy signal since 11:10. That's absolutely bullish. And the third one from Stock Charts Decision Point Scoreboard. This is the one that gives us the most detailed information, but it also is the one that is the most mixed. Short term, all universally strongly to the bullish side. Intermediate term, much improved with 5 of the 8 signals now are on the bullish side, and that's all up against the long term that's been mixed signals for an extended period of time. So we're especially looking to see these remaining intermediate term signals turn bullish. That's the primary time frame that we trade off of, and we'd like to see that stack of time frames come into agreement at the very least. Heading that direction at this point, and certainly our consensus of all these signals is to the bullish side, but with some mixed signals, especially with respect to intermediate to long term. In terms of position sizing opinion, both models are currently at 100%. Intermediate term market posture, severely strong bull, and you see these scores are all just about pegged up against the highest ratings they can get. The Russell at a 99.7. It has very little room to get any higher. So do remember, though, that anything that is a score above an 80 will remain severely strong bull. So even if these start to roll over a little bit, we can stay extended in this oscillator up above 80 for extended periods of time. And during that entire time, we would consider that to be a severely strong bull intermediate term market posture. This is all supported by a weak bullish sentiment line, and that continues to improve as well. You see the strength of the trend after having fallen below 80, which is normally in most markets a significant signal that we are going into a corrective period, has reversed. And of course, it's a V reversal right on the election results, which was a surprise and new information to the market. And just at this point, we're just a hair's breadth away from going back above 80 and going back into a strong trend, strength of trend. In terms of hedge warning status, we are at 0+, normal with some elevated conditions, mostly related to that Stock Charts Decision Point Scoreboard status. We'd like to see these all turn green and give us a nice stack. In terms of special strategy opinions, we've got the go-ahead on all 3 strategies. In terms of option income, VIX is within the acceptable range to initiate new positions for novice traders, and no particular other concerns at this time. Covered call strategies, I kind of thought that this might go a bit more bullish at this point, but probably given the just how far we have come and the expectation of a bit of a retracement, the opinion still has stayed at the 1-to-1 ratio of in the money and out of the money strikes, also 1-to-1 ratio of low beta and high beta. On this low beta, be sure to continue to pay attention to your sector rotations. We've had some strong sector rotations occurring since the post-election period, and some of those that have really been taking the biggest hit, like utilities, are some of these low beta areas. So you got to be selective in what low betas you're using, that you're not in something that is in a bearish trend. In terms of put selling, also acceptable, and you may very well have an opportunity to add to some of your put selling if we get a bull flag setup coming out of some of these indices. In terms of specific warning areas, we do have a bit of an increase in some of this. The volatility ratio warning has set up to fire, and it's on that side where that firing would be calling for increasing volatility, but we've not yet had a signal, so it's just ready. The current distribution day count on the NASDAQ continues to be elevated with a 7, and skew came in just above 125 to give us a bit of a warning status there, the lowest grade warning that you can get. So while I've got 3 of these in red, this one's actually not signaled yet. This one's just barely above the caution level, and the NASDAQ has actually been slowly coming down. So this perhaps is a relatively mild set of warnings at this point, especially in contrast to the other areas in which we look for volatility and trend and other types of warnings. Trend, everything's fine here. Severely strong bulls, good strong new highs on Friday, and the intermarket risk aversion indicators, all 5 are strongly risk on at this point. In terms of the fear and greed index, it continues to ebb up. It's now up to a 72. At 75, it would go to extreme greed. So that would give us an expectation that sentiment might be coming into an area where it might be excessive, and we might start to look for signs of reversal in the market. Given the chart patterns, none of that would be a bit surprising. In terms of sector specific, you can see the action from Friday. Remember, this was a short session, but still pretty much universally green, and very few individual companies were red on Friday's session. In terms of sector specific market postures by short, intermediate, and long time frames, you can see the sector rotations pretty much settled out, and shows consumer staples, healthcare, utilities, as the weaker of the sectors for sure, compared to some of the others, which are pretty much all universally green at this point. And we also continue to see improvement in terms of the consistency and performance across the various time frames, with healthcare perhaps being the one that has been the most negative. Much of this coming into before the election, and then since the election, has considerably leveled off and perhaps even retraced much of that. You see 3 months was down 5%, whereas 1 month is essentially rotating around scratch. So much improved there, so don't get too negative on healthcare right now. Healthcare has been strengthening as of late. In terms of relative rotation graph, continue to see transports, regional banks are the heroes, with a strengthening retail, and many of the others have been weakening somewhat. Certainly FDN has been weakening. That's been a favorite for quite some time, and has now fallen into the weakening bucket. Okay, I think that's probably enough for today. Let's go ahead and get this to publish. We've been running a little late this morning, given all the kind of stuff we needed to do after the long holiday. Disclaimers, as always, hit the pause button if you need more time to review the disclaimers. Also note the hyperlink down here at the bottom for the full set of disclosures. We'll be back here next time for the Tuesday morning market preview from Falcon Global. In the meantime, manage that risk, and you'll see your consistency enhance. And then, of course, seek each and every trading session to also learn something about your craft, and that will also increase your consistency of performance. Good trading.